All right, folks. Let's take a deep dive in at what is going on here. I believe you're all doing well today, and your weekend is going well. I mentioned the word, or I'm using the word weekend simply because this video is being recorded over the weekend. So, with that in mind, let's see what is really going on here. We're taking a look today at SPY, actually, specifically, which is considered one of the markets, and I'm currently using the hourly chart, just in preparation for tomorrow, with today being a Sunday. What is the possible chance and what's the probability that this is still going to be bearish, or if tomorrow might make a U-turn and we probably or possibly start seeing some bullish move. But before we consider that really seriously, I want us to consider the fact that this big bad boy started plunging all the way from September 13th. And as you can all see, um, the way it's been playing, it's like the entire day comes down and try to find some point where it feels like it's gonna reverse back to bullish, and all of a sudden the day opens below the VWAP. I don't have my VWAP turned on. Talking of that, but let's not worry about that. It's let's just consider it in this way. Let's say everything is below the 200 moving average period, or 200 period moving average, which is the 200 MA. So it went below the 200 MA on the 13th, and it's still been maintaining that position under the 200 MA. As you can see, there was a huge volatility. As you can tell from the Bollinger Band, the Bollinger Band expanded. That means that shows the high level of region of volatility. And of course, every time you see a squeeze, the little neck, you're expecting another pop-up or another volatile moment to happen. So every small or tiny neck or squeeze comes with a pop-up. So here comes a pop-up. Here is a squeeze on the 15th, and then there's a pop-up here on the 16th, and um, another squeeze around there, followed by another pop-up. So we are always trying to register some squeeze and pop-up, or some squeeze and volatility. So as you can tell from the 21st of this month, September, we had a squeeze, and then we have a volatile moment where everything's plunged down really bearish, and that gave us that bigger, volatile moment. But still, keeping in mind, everything is still under the 200 moving period, moving average. Uh, so that 21st went by, 22nd was still a volatile moment, market still bearish, and we got a squeeze. That squeeze is what popped out to be the very same. I mean, the very last volatile day, this last Friday of the September 23rd. And with that in mind, as you can tell the pattern. You can take a look at the pattern and behavior of all of these days. That as the day comes towards the end, it feels like it's going to give hopes, but all of a sudden, all that hope get crushed and the market open. Uh, Take a look at this. Each of these days ends in a green, somehow greenish. Each of these days close in a greenish way, and you can tell that. Um, for example, on the 16th, it was pretty greenish. Towards the end of the day, on the 17th, on the 19th, it was very greenish towards the end of the day. But that does not relate to the story on how the market opens. Actually, the market opens very differently. And with that in mind, I still think, okay, let's move this onto the daily chart. Okay, onto the daily chart. We're using 1 hour or hourly chart right now to actually to analyze this. So let's analyze this on a bigger scale, by taking a look at the daily chart. What the daily chart tells us, if at all anything simple or complex or more complicated, or if at all there is any hint about what might possibly happen. Not that I drew a line here. This is a red line that I can move around, and I drew this line based on the fact that our previous low was 360, and you know that the downtrend came along, and it got tested around here. Um, you know, this level of support, it was at 361, 360, and so the last bearish candle we got tested the next day, okay, before the market started rolling back up to the to a bullish trend. So with that in mind, let's take another look at another position where that might have happened. For example, if we consider here, let's just consider here. That's not very specific. Let's consider here. Um, Downtrend comes, of course, when you see a big candle which engulfs the other, you possibly know something is about to happen. But take a look at this, guys. This comes, it still get retested again, and once that happens, we then have the hopes that possibly something is um, starting to change. So this was tested. I am still predicting and hoping that, not just hoping, actually, I am quite sure that this will get tested again um, at the market open on the 26th tomorrow. And so that means if this breaks below the 360, oh wow, we will still have a long way to go, because once that's broken, we will have some long journey to make. Do note that the MACD here does not show any sign of, you know, I'm gonna make a turn or something. So the MACD is still just plunging all the way down. MACD crossed back on the when was 18th, on the 18th of August, and it's still going down. Although it almost went back on the 12th of this September, but that did not happen. And there's one particular indicator that I really like to use, and that is this particular bad boy. This guy is called the VI, which is the vortex indicator. So the vortex indicator, really, I use this specifically for option trading. And what that does is that you can it well, it's still not very effective, and I don't recommend that you should copy this or use this unless if you really know what you're doing. So I used the vortex indicator and the TTM squeeze, just to back up each of those. If I see that those two are agreeing to each other's, I I I see, or I look at the market and see what the market is telling me. Um, and of course, I have actually I have three things. I have three things which I nearly don't use any of them, but it's just for a reminder's sake. I do have to keep them up. So I use this EWO, and that pairs with the lower TTM squeeze, and then those two, with along with the vortex indicator in the middle here, those two gives me a very good understanding of what's going on. For an upward trend, the EWO will turn to yellow, meanwhile the TTM will turn to green, which I probably should actually make them both do the same thing. Uptrend is yellow, I will change that to green, and then downtrend is red. I will change that to red as well, so that we are all speaking the same language. Okay, so as you probably all know, when you see red, you know that you are entering bearish mode. So that will mean, on the candle, on the chart itself, I have the 20 period moving average and the 8 period moving average in place, simply because I am not working at or looking at a very long position. If I was looking at a very long position, I would use specifically the um, the 20 period moving average and the 40 period moving average. Why? Because in a long term position, you don't want to really act very quickly. But if I want to act very quickly, within the day or intraday, I want to use something that can really give me a quick output pretty soon. So I'm using the 8 period and the 20 period moving average on the chart. So with that in mind, as you already know how the moving average works, in case you don't know, I will just give you a brief or quick overview of it. Then probably I will make a video on it. With moving average, the way it works is that not that the bluish or I don't know what color is that, palish, whatever it is, uh, leave alone the purple. The bluish here, this says 20 MA, and then the purple there says 8 MA. So when the 8 MA cross right below that bluish up there, that's probably the point for you to take action. But for me, on my case, before I take action on that, I want to confirm that the EWO is telling me EWO. I call it the EWO for now. The EWO is telling me that we are entering a bearish mode. At the same time, I also want to confirm that even if that is telling me the thing up there, I want to confirm that the vortex indicator VI is also telling me that, oh, what is going on up, what is on top right now is, um, is the red signal, which indicates um, the bearish move. And just to clarify, when I'm using VI, I want to trade my action depend on what is on top of this two candle. If what is on top is green, I'm gonna buy. If what is on top is red, I'm gonna sell. You know. But anyways, speaking of TTM squeeze, I will turn this bad boy as well into red probably if I can. Hopefully I can. Um, So I believe it should be this guy, which I would primarily make it this. Oh, and actually, the beautiful thing with this is that this actually tells you where things are getting bad. Um, and then I will change this bad boy from that into actual red. Okay, and then I will leave that faint one. I will tell you what that faint one does. With this faint one, Um, this faint one is giving you actually a signal that things are about to get bad. Things are about to get bad. And you see how it lines up with this angle corner of the VI. Although the AWO doesn't tell you anything about that, um, the TTM will tell you that, oh, we are actually pretty green or pretty doing pretty well within this region. So what you probably want to keep in mind that you should still hold your position. But the problem with it, um, is that there's a little lag for you to enter in the market. It's a little too late if you're not paying attention between the if you're not paying attention to the top two. You'll you'll see that you will miss the entry point um, on a good market at some point. But for a market which is going to be bearish, if you take good action, and also if you're keen enough, you will not miss simply because take a look at the bearish market, bearish trend. If we have a bearish trend here, and this bearish trend is about to turn into a bullish trend, you will see that the deep red start fading to be brown. Once it enters into a brown state, you want to watch the action of those other two top indicator in addition to the MAs. So this brown trend, this brown here, is telling you that there is some play coming up on the other end, on the other opposite side, which probably you want to consider. You might want to consider. So yeah, then with that in mind, you just watch what is going on with the MAs. As long as one is below the other, no action. As long as they start crossing and this guy is fading towards brown to green, you wanna find your entry points within that region and just attack the market. Attack the market on a way that you think is you know is making sense or makes sense to you. And speaking of that, we're still talking about SPY here. We're still talking about SPY, and as like I said before, for you to enter into for you to enter into a what a bullish trend, this has to fed this has to fade a little bit from deep red into brown, um, which nearly happened a while back when we were looking at TTM. But now, but now, look at what's going on. It's getting back into the deep red, and at the same time, you see that the VI or the vortex indicator is still, whoever is on top is still the president or is still winning the game. At the same time, AWO is actually, the histogram size is increasing in length. That means more volume is coming in and more pressure is coming in. So that means the next day should even be much hotter. Uh, so just look at that. Look at the EWO. This is shorter. Next day we're looking at this day here, the fourth one from the right. Short. I mean short, long, longer, and longest. And then we're expecting longer, probably, which means we'll be at around negative 20.8, point 0.9 there. And if that happens, we already have a really good bearish market, um, that we will start expecting a U-turn around it. And once we see that, you all know what to do. You know the game, you know the drill. You can go ahead and do whatever thing you do. I use SPY because the SPY itself is a part of the factors which controls the market itself. So if you want to participate in things like option, pretty much, SPY, things like SPY is what you want to, or QQQ is what you want to keep your eyes on, because really, this is what takes your money and this is what brings your money. Just know how to play the game, know the rules, know the drill, your emotions, and all those keep it in a drawer somewhere that you probably have its key swallowed so that you don't release those emotions easily. But just don't deny the fact that don't deny the fact that there's no substitute for the truth. If the truth is that the market is going down, it is going down. Don't sell against the market, otherwise you're screwed. I'm gonna tell you. Oh, my bad, I didn't mean to say that, but just keep that in mind. Just keep that in mind. I mean, in a long term, because this kind of things will be handy, like really really handy as time goes. So, with that in mind, I just want to wish you good luck on your next day. Maybe you'll get yourself a lot more confident, or a lot more settled with this technical analysis things, and you will find your way around on what works best. But for now, those are kind of some sort of indicators which, primarily, you can use. Actually, also, before I actually close this video, I want to point out one thing, that if you like to use your own script for, for your indicators, there are things you can do with that. Make sure you open. Let me actually launch one thing. Let me launch one thing for you. I will log in. Uh, Probably you already saw that, but that's okay. That's okay. Um, all right. So, these are some of the market controllers. These are some of the market controller. But when I say market controllers, I'm not including things like the meta cops, whatever it is, not meta cops, meta, or, but you know what I'm talking about. Anyways, the one thing that I also like to look at every now and often is that, the IXIC, which is the index, Nasdaq index, the Nasdaq index behave exactly or nearly the same as, SPY. It's Everything is like everything cloned into one another. Everything cloned into one another. If I pull SPY, you will see that the behavior of these two charts is exactly, or it's nearly the same, like nearly the same. This is SPY. As you can remember, I told you I drew a red line on it. I drew a red line on it, and there's that purple line, which this red line is indicating this lower, level of, you know, and the two charts looks pretty much the same. So, but because you cannot trade the IXIC or the Nasdaq index, you can trade that Nasdaq index through this SPY. It's nearly the same thing, nearly the same thing. So when Nasdaq is low, SPY in a way should also be low. So just keep those in mind, okay? Just keep those kind of things in mind. And so what I like to do, is that I like to use custom indicators sometime. And because I just logged into this, my custom indicator will not show you what I am talking about. But I am gonna close it. I like looking to my right or to my left. I don't know what I don't know what my camera is telling you, because I have a monitor which is just sitting over there doing nothing, and because it's just too much resolution, I cannot record on it. If I record on it, my recordings will be quarterly missed or halfway missed. All right, let's take a look at this. Um, let's say we open this guy. Okay, this is what a custom indicator looks like. With a custom indicator, the beautiful thing about it is that it can. Oh, actually, the worst thing about it is that it can only work on the web version of Weibo. That means you want to log on Weibo on the web, and then when you are there, you want to um, there's a pop-up. It's a little tiny pop-up which says install, install Weibo, or install. It doesn't say install Weibo, but it just says install with a light, with a little tiny monitor's picture at the top right corner of your monitor. You will see that on your task, on your search bar. So when you get that, install that. Don't install this. This will install the desktop version. If you see what I'm pointing, this will install the desktop version, but you will only get the other icon after you have logged into your account. Otherwise, good luck. So once you get this kind of things, or you already have your script, you can go ahead and just have these scripts installed. For some long-term position, this script will help you. This script will help you. Um, and I have this in such a way that you probably already know how it works. When I have a solid blue cloud, that means I don't have to panic. Things may happen. And when I say things may happen, let's take a look at this region here. At this region, you saw that market picked up on a bullish trend, and then deep down here, but everything is still above the blue cloud. And so that means I can still hold my position, even though the cloud down here is telling me that. Actually, the cloud down here just tells me where, at what point I should enter, you know, or at what point I should get out. But I can, this can cause panic at some point, because um, this is just like MA, but this is also effective at some point. So I will, for a long bullish trend, I will focus on the being above the blue and being inside the green. As long as I'm inside the green and above the blue, I don't have to panic. But but at the same time, I am also keeping an eye on what point is Weibull telling me that, oh, this is actually the highest point you could ever be on this trend. That means when you see that, or when I see that, I want to take action like right away and just get my stuffs and boom, run, or close my positions on that long trend. And assuming you're selling options, just assuming you're selling options. But remember, this is a weekly schedule. This is a weekly chart. This is not a, actually, let me pull it back to the daily chart. So on a daily chart, this is nearly the same thing we were talking about. You ride with the blue cloud. As long as you're above the blue cloud, things will happen. There will be dips and, and all that, but that's okay. If Weibo gives you a confirmation that you are probably above this is the highest you can be, you wanna find your way out, or you can just write a script which tells you the high of the next, of the last 10 weeks. When you see that higher high of all times, get out, or the higher highs of every week. When you see that higher high of every week, just get out. So if you have your script and you want to use it, you want to come to indicators. This I will show you this later in a different video. Come to indicators, say edit, the edit script, um, and that will allow you to write your script here. Say close, whatever it is. You find, you define what you want to deal with, and then you know you just be able to compile it, and um, that way you just save it and run it on the app itself. And this is what's going on anyway. As long as for the downtrend, as long as you're below the yellow cloud, don't worry about it. And as long as the whole general cloud is red, don't worry about it. That you are still on a bearish trend. And speaking of that, when we go back to SPY, we will tell that SPY actually just got itself into a yellow cloud, starting up, forming up. That means once this motion begins, it's not easily stoppable. I mean, it can still be stopped, but with a really, really high factor to be considered. So those clouds, those are considered main cloud. Those clouds will stop after some impact. They just don't stop right away. I keep glaring down because my phone is buzzing and all that kind of thing. So just keep that in mind. So if you just a heads up now to summarize everything up, if you had a put position around here, and as long as it's not expiring in one day, you should be able to grab some money out of that. If you're selling option, because you can tell that this is a continuation of something which is going on. As you can tell, it's just got chopped. So where's the other end? We want to finish the other end before you guys can start thinking of, oh, actually let's make a u-turn and go the other way. That doesn't happen easily. It will happen, but it will take some time. It will take some time before that guy picks up from there and go the other end. um, it will still you know make this turn probably around here, um, at the lower of, I cannot say it's gonna be 355, 3 whatever it is, but I can tell you that it's at least gonna be below 367, below 367. And when we say that, that's when we'll start giving action that, okay, at this point, what do we have? What is TTM telling us, and what is VI telling us, and what is EWO telling us? Those kind of factors then all keep piling in, and then we start taking longer positions, which eventually things like you buy calls, you buy calendar spread, which expires in the next few weeks or the next few months, those kind of things, and then all those factors keep coming in, and eventually you're taking actions which does not betray you against the market, and ultimately is bringing profit into your pocket. Okay, so I'm just kind of sharing with you some of the thoughts. I will make a video on this option things I've mentioned, and if you're interested in it, please just leave a comment in there, um, in this video, and just hit the like and subscribe button so that we can share some of the things as we try to educate and share resources with each other, so that my success or my success becomes your success, and your success becomes someone else's success, or rather comes back to me from your comment. Okay, so that in that way we're helping a brother out. With that in mind, please be safe and good luck.